Blackstone buying into a global cricket league? I read that rumor twice to make sure I wasn't hallucinating.
It makes perfect sense. Live sports are the ultimate sticky asset class.
Oh, please, it's a total vanity play. Give me those unit economics and I'll show you a bonfire.
Tell that to the IPL. Anyway, Janus Henderson just threw $52 a share on the table to finally kill the Victory Capital bid.
A 25% premium definitely buys a unanimous board. Let's see if their math actually holds up. The rundown.
So Apollo's dropping $3.7 billion on Nippon Sheet Glass. Just a massive buyout in Japan.
It is huge, but it perfectly tracks with what Citi analysts are projecting for financial sponsors in Asia right now. They're gearing up for a very busy period.
Right, riding the momentum from KKR's Singtel deal. The mega deal is alive and well in the East.
I'm going to push back on that actually. You're looking at Japan and projecting it across the whole region.
How so?
Look at Southeast Asia. The financial services sector there is seeing real valuation dips. It's forcing a massive pivot toward much smaller acquisitions and minority investments. The mega deal is absolutely not the standard everywhere.
Fair point. Japan is its own beast right now with the cheap yen, and Apollo just has the dry powder. But speaking of dry powder, pharma is emptying the absolute vault this week.
You mean the classic, we forgot to do our own R&D, so let's just buy it strategy?
Hey, it works. Merck is reportedly closing in on a $6 billion acquisition of Terns Pharma to beef up their oncology side. And Gilead is right behind them, nearing a $2 billion deal for Ouro Medicines.
$6 billion for Terns. I need to see the definitive agreements on both of those, which we should actually get by tomorrow. I'll be refreshing Edgar for those filings.
Same, but Maya, I need your take on this rumor. Blackstone is reportedly evaluating a stake in a global cricket league.
Wait, really? Cricket?
Yes, the ultimate alternative asset class. I guess when you manage $1 trillion, you eventually run out of real estate and software companies to buy. You pivot to wickets.
That's actually hilarious. I kind of love it. It's certainly more entertaining than the Challenger and Pepper money collapse.
Total train wreck. Pepper's independent board rejected Challenger's best and final offer of $2.25 per share.
They called it unexecutable, which is just polite corporate speak for don't ever call us again.
Exactly, but you know who did manage to execute a sweetened offer today? Janus Henderson, and they had to throw a 25% premium on the table to make it happen. The big one, $52 a share. Trian and General Catalyst finally coughed up the extra cash for Janus Henderson.
25% premium to the unaffected price, which, honestly, they had to do. The board was never going to rubber stamp the original offer with Victory Capital circling the wagons.
See, I actually think Victory Capital was just a stalking horse here. They pushed the price up, but that deal was never getting done.
Wait, really? You think Victory was just playing spoiler?
100%. Look at the language in the press release. The Janus board unanimously approved the Trian deal and officially tossed Victory out because of quote-unquote high closing risks. That is banker speak for we do not want to deal with the regulatory headache of merging two massive traditional asset managers right now.
I disagree. I pulled the filings this morning. The closing risk wasn't just regulatory, it was financing and structure. Victory's proposal was complicated and Trian and General Catalyst are bringing cold, hard cash. $52 of it. Cash is king when your sector is bleeding outflows.
Fair point on the cash, but you are completely discounting the strategic angle. General Catalyst brings the tech and private credit spin. Trian brings the activist operational playbook. Victory just brings more of the same mutual fund scale.
Okay, but more of the same pays the dividend while you figure out the tech pivot. I just hate the narrative that traditional asset management is dead, so we must sell to an activist and a VC firm to survive.
It is not dead, it is just boring, and boring gets you a stagnant multiple. Trian and General Catalyst are buying a cash machine they can completely rewire.
Speaking of rewiring, can we talk about who actually lost here?
Victory Capital's M&A team who probably missed their kids' soccer games this weekend for nothing.
Exactly. And they got publicly stiff-armed, but honestly, I think Janus Henderson shareholders won. They squeezed out an extra few bucks a share just by letting victory linger in the lobby. That is just smart negotiating.
Classic leverage. It reminds me of the Challenger and Pepper Money mess that just collapsed down in Australia. Challenger threw out a quote-unquote best and final offer of $2.25 a share, and Pepper's board basically laughed them out of the room.
Unexecutable was the exact word the independent committee used. Ouch.
Unexecutable. That is a polite way of saying your financing is a joke and we are not taking your calls anymore. It is brutal out there for buyers trying to lowball right now.
I love when independent committees get feisty. It is so much better than the usual corporate jargon.
Speaking of feisty, I hear Blackstone is looking at taking a stake in a global cricket league.
Oh, come on. Private equity buying into cricket? I need to see the term sheet on that one before I believe the return profile. Are they valuing the teams on a multiple of wickets?
I will try to dig up the pitch deck just for you. But before we get totally derailed by sports, we need to talk about what is happening over in Japan. Apollo just dropped $3.7 billion on glass. Voices?
I am looking at this note from market observers on Southeast Asia, and they are painting a completely different picture than the rest of the world right now. Global mega deals are surging, but over there, total strategic pivot. Valuation dips are forcing everyone in the financial services sector into tiny acquisitions and minority stakes. Nobody wants to catch a falling knife.
See, I completely disagree with that framing. It is not a retreat, it is just sponsors getting smarter about structure. Look at what Citi analysts are saying this morning. They are projecting a massive wave of financial sponsor deals in Asia. They just led that STT GDC deal for KKR and Singtel. The big money is absolutely still playing over there.
Playing, sure. But look at what happens when they actually try to close something complex right now. The takeover talks between Challenger and Pepper Money just officially collapsed.
Well, that was always a messy one.
Pepper's independent board rejected the $2.25 per share offer. They literally called Challenger's best and final offer unexecutable. That is polite board speak for this is a complete joke and we are walking away.
Fair, the execution risk was clearly too high. But if you want a real joke, or at least a massive curveball, look at what Blackstone is doing. Forget Southeast Asian fintech. Word on the street is they are evaluating taking a stake in a global cricket league.
Wait, really? A cricket league?
A cricket league. The boys in quarter zips are coming for the wickets.
That is incredible. I desperately want to read the risk factors on a cricket league buyout.
I would pay good money to watch a Blackstone managing director try to explain the rules of cricket to an investment committee in New York.
I bet the cash flow modeling is fascinating, though. Speaking of models, we need to check. Keep your eyes on the SEC filings tomorrow. We are expecting some massive definitive agreements in pharma.
Oh yeah, Merck's $6 billion play for Terns Pharma and Gilead's $2 billion deal for Ouro Medicines are both supposedly hitting the wire tomorrow morning. Spill the tea. So Challenger and Pepper Money are officially dead in the water.
I love the exact phrasing from Pepper's board. They called Challenger's $2.25 best and final offer, quote, unexecutable. Unexecutable.
That is classic banker speak for we hate your financing package, or we just hate you.
Exactly. It means your math doesn't add up and we are embarrassed for you.
Speaking of weird math, the rumor mill says Unilever is talking about spinning off its food business to combine it with McCormick. I am completely obsessed with this idea.
You just like the idea of putting Hellmann's mayo and Old Bay seasoning in the same corporate structure.
It is a legendary flavor profile, but seriously, it makes total strategic sense. Unilever sheds the slow growth grocery stuff. McCormick gets massive global scale.
I am absolutely not buying it. Unilever's food portfolio is a giant tangled web. Carving that out and stapling it to McCormick sounds like an integration nightmare. Show me the margin improvement first before we start cooking.
You have zero vision for synergies. Fine, if you want something completely out of left field, how about Blackstone evaluating a stake in a global cricket league?
Wait, really? Blackstone?
Yep, Private equity's sports obsession continues. They ran out of European soccer teams, so now they're doing cricket.
I can't wait to read the risk factors on that term sheet. Weather delays, pitch tampering, and unexpected tea breaks.
Don't underestimate the cricket viewership numbers in Asia. City analysts are already flagging a huge pivot towards smaller niche financial plays in that region right now. This completely fits the macro thesis.
A cricket league is a macro thesis now. Okay, whatever you say.
Hey, I just read the pitch decks.
Well, put the cricket bat down because we have some actual massive pharma checks to track. Merck and Gilead are both supposed to drop definitive agreements tomorrow, and I want to look at the premiums. Tomorrow's radar.
Keep your terminal open tomorrow morning. We're on watch for two massive pharma prints. Merck taking Terns Pharma for $6 billion, and Gilead grabbing Ouro Medicines for $2 billion.
The Gilead deal feels completely defensive to me. $2 billion for Ouro? I need to see the milestone structures in the definitive agreement before I buy that valuation.
You always hate the pharma premiums. It's a pure oncology land grab right now. You have to pay up.
I don't hate the premiums, Nate. I hate opaque earnouts. What else are you watching?
Okay, you want opaque? How about Blackstone reportedly evaluating a stake in a global cricket league?
Wait, really? Cricket?
Yep. Talk about an alternative asset class. I'm picturing Steve Schwartzman in cricket pads right now.
That's a terrifying visual. Please stop.
Never. Anyway, we're also refreshing the SEC feed tomorrow for Estee Lauder and Poo.
Right. I want to see if those combination discussions are actually moving forward or if it's just corporate theater.